Hi everyone and welcome to today's morning report on Thursday the 23rd of July with me, Rich Perry, market analyst at Hantech Markets. European trading sessions got off to a fairly solid start actually, sort of unwinding some of the weakness that we saw yesterday. Wall Street was pretty much slightly lower into the close, and then Asian markets settled overnight. There's been no major news that's driven that settling, but certainly the big driving force in the markets at the moment still remains these commodity prices, which have been under significant pressure in recent days, although they've slightly taken an uptick today, and that might be one of the reasons why we're getting a bit of an uplift in the markets as well. But also across the European corporate earnings, you've had some decent numbers coming out this morning as well, so a slightly positive outlook. But certainly that, as I said, that commodities argument is still playing through the markets. You've seen the oil price back below, this is on WTI, back below $50 for the first time since April, or early April in fact, and it continues to retrace that rally that we saw throughout the second quarter of the year. How's this playing through on the dollar? Well, you've seen a slight decline today. In fact, that decline on the dollar has sort of fallen away in the last hour or so, so it's interesting that that's been seen, and that's slightly beginning to give these markets a little bit of direction in the last sort of half an hour. But another commodity chart to show you that is under pressure. This is copper, and that is again at multi-year lows actually on that copper price, going all well. My chart doesn't go back beyond 2011, unfortunately, but still at very low levels indeed. So yes, this is certainly playing through the markets, and it could well rear its ugly head once again if the bears take hold later on. I mean, the early rebound that we've seen in equity markets, FTSE is just dragging back towards just 0.2% higher. It was much better than that at the open, so it's interesting to see how these play out today. The big news in terms of forex markets is this rate cut that we saw from the RBNZ. It was sort of largely touted by the markets, and the interesting fact is that the Kiwi has actually jumped significantly on the back of that news. The rate cut was pretty much priced in, but the fact that the RBNZ was not necessarily as dovish as the market had thought it might be sort of has caused a significant rebound in the Kiwi today, up more than 100 ticks, which is 1.7% at the moment as I speak on the Kiwi higher, so a significant rebound on that market. But pretty much across the board, the dollar is beginning to come under a bit of pressure. Euro's just jumping, and sterling is also jumping, so these markets are beginning to gather direction as this session starts up. So the economic announcements for today, we got UK retail sales at 9:30. They're expected to come in at on an ex-fuel basis, come in on the year-on-year up at 5% again, so an improvement once again. So those retail sales to the UK remain strong, and that would certainly help to boost cable today if that were to be seen. Then at 1:30 we've got the weekly jobless claims, which are forecast to come in around 280,000, which is pretty much in line with what we saw last week. So my chance today, as I said, on a commodities theme, I'm going to look at silver. And silver's been in this downtrend channel. We saw that massive sell-off on gold on Monday. We didn't really see a significant sell-off. I mean, yes, gold was down on Monday, but certainly not to the extent. Yes, silver was down on Monday, but not to the extent that gold was. And perhaps the selling pressure with sort of came through on the breakdown below that 1550 mark, which was about 3 weeks ago now. But we had that rebound. We're back to we're playing into a downtrend channel here on the silver chart, and the momentum indicators are very negative configured for the last couple of months. Really, look at this 21-day moving average flanking this downside move, consistently being used as a sort of an opportunity to sell whenever you see that 21-day moving average hit. Now, interesting that we've had this decline in the last week or so, but it's consolidating now, and you are actually seeing in the last few days a bit of a consolidation that might actually result in a bit of a base pattern. 1490 is a resistance in place on this chart. a bit of an old support become new resistance. So if it broke above 1490 and closed above that, saw a couple of hours closing above that, you'd say that that would be the breakout of that base pattern, and you'd then start to think about upside targets, and you'd take sort of as a minimum. I mean, because it's a recovery within a bear market, I would take a minimum target, 1460 up to 1490. That's 30 cents worth. If you add that onto 1490, that gives you 1520. Back on the daily chart, 1520 is around about where this downtrend channel starts to come back in again. So you might get a rally back towards that downtrend channel, but I would be using that as another chance to sell if you did see that. It would certainly be the RSI unwinding back towards the mid 40s again, and MACD lines maybe back towards a little bit more neutral. But certainly I think these momentum indicators are suggesting that rallies are a chance to sell, and I think certainly that RSI is part of that argument. And the 21-day moving average up at 1530 at the moment. All these sort of arguments play into the fact that any rally you see on this silver chart is a chance to sell for a retest of those lows once again. That low coming in at 1450 at the moment. So I wish you good luck in your trading today, and I will speak to you later. Thank you.